Maybe we could turn to US companies. And the question is, could you provide us a broad earnings outlook for US companies?
I mean, the one thing I can tell you is that late in an economic cycle, when we look back at things, there's a consistency of the sell side to overestimate the earnings growth of US companies or any group of companies. I think the US economy has been exceptionally resilient, surprisingly. A big chunk of that has been driven by AI infrastructure spending. So actually, consumer has been weakening the past couple of quarters, but AI spending has picked up that slack. So I think that's going to be a big delta in terms of the economic activity. And it's not widespread. So we've seen pockets of strengths and many pockets of weakness. But I think one of the things that US companies have struggled with kind of last year and the year before has been the increases in interest rates. And that coming down should help them collectively, at least. I think the big unknown as well is what happens to tariffs. We've yet to hear from the Supreme Court. I think the Trump administration, even if the Supreme Court rules against them, will find another way to impose those tariffs. So the tariffs have been pretty significant for at least certain types of companies in the US. But so that's another thing. So I think it's a point of extreme uncertainty. I think there's always uncertainty when predicting earnings over 12 months or for that matter, a longer term. But I think there are just a lot of balls in the air now that make it exceptionally difficult. I mean, luckily we don't make these predictions. I don't need to make these predictions. We focus on our knitting. We focus on the businesses that we like and own, and do our best predicting those within a very wide range of potential futures. And we buy these companies and own them only when the price makes sense in a lot of these scenarios. Agree?
Yeah, so I certainly, subscribe to the theory that the US has a K-shaped economy where the wealthiest Americans have been doing exceptionally well, but actually a huge portion of Americans are actually really struggling, and we're seeing this in a lot of consumer stocks, in a lot of stocks, anything that is not exposed to luxury and not exposed to tech, or some indirect beneficiary. That strength has really been masking a lot of pain for a lot of traditional great businesses. Actually, a little shout out to my brother's market research company. He's been doing quite a bit of work on this, and his data points are just seem to be showing all this to be very true, and that there really is a lot of difficulty, at that point of the market. But at the same time, look, this gives us an opportunity to buy some of these businesses at depressed valuations, at trough earnings. So, we have to sort of look at it with some optimism for our portfolio.